All right, Bulls and Bears, we're back with another dose. Thank you for joining me. Let's go ahead and get right into it. As always, a ton of economic financial news to get caught up on here. First of all, let's start off with this right here. For those of you that didn't believe me when I said there's no connection between Main Street and Wall Street that can bring the stock market to all-time highs at the click of a mouse. Today, Dow Jones over 40,000. Folks, this is another all-time high close. We said this would happen, and people, they often said I was crazy, I was doom and gloom. Folks, this shows you the disconnect between the stock market and Main Street. Main Street is the consumer, the average working person, the middle class, in all-time high debt. But yet, stock market all-time high. How does that work? Well, if you go back to what I've been saying here for years, the stock market, folks, is mostly owned by the top 10%, the billionaires, the hedge funds, right? The trading firms. 90%, close to 90% of all stocks owned by the top 10%. When the top 10% decide to all get together and sell, then you'll see a stock market correction. Simple, right? The click of a mouse, folks. They could hit the sell button all at once and they could bring this thing down in an instant before the average Joe with his Robinhood or E-Trade account even has time to figure out what's going on. Will it happen? I think eventually something big is going to drop and cause enough of a panic, or maybe they're all just getting together and waiting for the right time to all get together, because a lot of times they know what's going to happen because they create what's going to happen. You know what I mean? Talking about the wars, we're talking about the quote unforeseen events that nobody else expects, the black swans. So yeah, 40,000 Dow Jones, folks. Bring up a chart here. Look at the enormity and look how steep exponential increases here. Even after corrections in 2020, boom, right back up beyond the previous peak, new all-time highs 4 years later. Amazing. You know, people thought it was insane back in the financial crisis when the stock market, in this case the Dow Jones, was at 13,000, and then it crashed down to 7,000. And when it hit 7,000, people were like, oh yeah, the correction, it had to happen. We were at 13,000. Folks, now we're at 40,000. Again, while consumers are in all-time high levels of debt. Let's bring up a chart of the debt right now. This is amongst consumers, mortgage debt, car loans, student loan debt, all rolled up here. 18 trillion, folks. This is as of the first quarter. If you get the second quarter numbers out, we're $18 trillion in debt collectively. Of course, the biggest is the mortgage down here in the yellow, and you see student loans here in the red. What do we got here? Credit card debt in the blue, right? Pretty much all worse than the financial crisis levels, but you have the stock market at all-time highs. Why? Because it's not the average person. Oh, sorry. I'm sitting here talking about the chart. If you look at the yellow right here, that was mortgage. Red, student loans. Auto loans is the green. Credit cards the blue. You get the point, you get the picture. 18 trillion versus what? 13, just over 13 trillion back at the peak before the financial crisis. And then ask yourself, why did debt drop? Why did it decrease after the financial crisis? Because it was much harder to get a loan. And when people can no longer borrow money, the economy goes with it, and then job losses accelerate. And the whole thing's just a big snowball rolling down the hill. So they can't let that happen this time, at least not this year. They don't want it to happen. I think if it does happen, it's going to be something pretty major that causes the markets to come down, like 2020, right? So I'm still in the market, not very heavy. I'm actually shorting some stocks right now. And when I say shorting, I use put options, right? So technically it's not shorting because shorting is a different style of trade or different type of trade. But the one of the trades that I was in actually went against me. So my streak of 9 wins in a row may be ending. Now I'm going to add to my position here, so it's not a losing trade yet. But the stock that I shorted was Rivian. So I hope nobody followed me on that. If you're not aware of how I do this, right? I take a small position at first, and then if it goes against me, I can add to the position if it goes against me. So, you know, I don't recommend following anybody because someone's style or their plan or their strategy may not be the same as yours. So instead of just taking the loss, I'm going to add to my position as the stock went much, much higher. We'll talk about that later. First, It's reported BRICS will use a gold standard. Big news, folks. BRICS nations using the gold standard. The Hedge and a few other people are reporting that. Now, right now, it's just speculation. It hasn't been publicly announced. But I still don't fully trust the BRICS nations. I mean, do you really want to trust China and Russia with a people's currency, a sound currency? Right? I think a lot of this may be even a big setup for a digital currency. Right? I hope not, but you have to be cautious. Right? You can't just be overly optimistic. And I've been one to say that I think ultimately gold, silver, and precious metals and other commodities would be the only reasonable way to do a financial system. And we know that a lot of these countries, these BRICS countries plus, they're trying to get away from the dollar. The dollar's been used as an abuse tool. It's been used as a control tool for many, many decades since the Bretton Woods Agreement. Well, that is ending. Will it go out with a bang? Will there be a crash of the dollar once this is announced, if it is announced? Or will it just be a slow decline that's going to take years and years and years? I'm hoping for a big crash. I want things to happen suddenly. Get it over with. That's how I've always hoped things happen. Other people, they're a little bit scared of that. Well, let's talk about U.S. here. The second largest purchase for most people. Number one being real estate. The second is cars, automobiles. Take a look at this here out of Axios here, and this is the wholesale used car price, right? The average. And we saw it jump up to over 23,000. Was it 23.5? The early 2022, we're down to 17,900, right? Pretty big drop. Now you would think that there would be more of a noticeable cut in the price of cars. Why are we not seeing actual cars for sale at the car lots drop like the wholesale price? So that's because dealers are not passing along the savings to consumers. Instead, they're basically hoarding vehicles. And usually when the lot is full of cars and they're not selling fast enough, dealers drop the price to get rid of them, to make room for the new models, etc. And plus transactions equals dollars, so they want transactions. In this case, they're getting overflow lots, and a lot of it's these these vacant commercial real estate properties. Many car dealers across the nation are getting these vacant properties to just buy vehicles and set them in an overflow lot, even brand new vehicles in some cases, right? So what they're hoping for is to just hoard all these vehicles, and then if rates go down, they know they'll be able to sell the cars for a higher amount. That's what I think is happening. I mean, please let me know what you think down in comments, because obviously bringing up this chart here, looking at this chart, vehicles actually, the sale prices have not dropped like we've seen here, right? So from 23 down to right around 18,000, right? We haven't seen car prices come down that much. That tells us that the dealers are hoarding these. And it's not just me saying that. There's videos out there showing these overflow lots. A lot of different people on YouTube actually go and they explore these lots. And I went to buy a car last year. I was test driving one, and it took like 25 minutes to get the car because they had to go pull it from an overflow lot that they had like around the corner. That they didn't even have the car I was looking for, even though the dealer that was advertising it, I was at the dealer. They had to go around the corner to their overflow lot to get the car. It took like almost a half an hour. So I had heard people talking about these overflow lots even before that, but I witnessed it firsthand right here in Southern California. All right, let's move on here. Some other news here to get into today. One of the themes that I've constantly reminded people of here is that things are going to get worse. All right. And another thing happened here. U.S. office loan delinquencies spiked. Rising vacancies. So it got worse, right? So let's go over some of the numbers here out of this one here. This is out of Minimize. And, people said, I'm wrong. I'm doom and gloom. I'm fear mongering. We're right again, folks. The vacancies just got worse. In June, the delinquency rate for U.S. office loans rose, driven by higher vacancies and elevated interest rates, of course. Office loans representing 55% of all 30-day delinquencies saw a marked increase from May's 45%. All right, so again, things are going to continue to get worse. At some point, will the banks break? Right, we already see over $500 billion in underwater commercial real estate loans, and the delinquencies are getting worse. There's more foreclosures on big office buildings, even apartment buildings. It's getting worse, folks. So will there be a point where the banks collapse, or can they just create enough money? Remember, they can create trillions of dollars at the click of a mouse to infinity. Will they be able to keep all these banks just propped up just by newly created money, and they'll just add it to the debt? It's borrowed money. The U.S., we don't even coin our own money. It's borrowed money. We borrow it from the central bank, who creates it out of thin air, folks. It's insane to even say that. Sometimes I have to ask myself, am I really saying what it is? Yes, that's reality, folks. There's no limit. People thought there was a limit when the national debt hit 10 trillion, 20 trillion, 30 trillion, 40 trillion, almost 40 trillion. Not yet, but it's going to get there. All along the way, people have been saying this is unsustainable, folks. They can double the debt in the next 10 years if they want to. They can create another $10 trillion next week if they want to, right? I don't think they want to do it that extreme because they don't want to destroy the dollar that quickly. It's being slowly destroyed, but I don't think they want it to become obvious to everybody. So they're going to do it slowly, incrementally. That way nobody really notices. And they're going to say, oh, no, look, it's the supply chains. It's this, it's that, causing the prices to go up or causing inflation. They're never going to say it's our policies that are causing the problems here, causing the high cost of living. They're never going to say that. All right. So you're going to see distractions. You're going to see fake news out there, fake data. Look at the jobs numbers; it's fake. The unemployment numbers fake. It's all phony, manipulated, and false, folks. So we're gonna wrap this one up here. Hope you're doing well. What do you think about the chart of the debt in the Dow Jones 40,000? No connection between Main Street and Wall Street. What do you think about the used car wholesale prices coming down, but really things didn't get that much cheaper at the car lots, did they? So what are they doing? They're hoarding the vehicles. What do you think about that? Let me know, folks, and thanks for watching, everybody. Keep stacking as always. Bye for now. Peace.